Move on and talk about rentals now, because I think the rental sector is another very important tipping point. And I was pushing back against the idea earlier on that everyone was saying, "Oh, the rental crisis is over." The rental vacancy rates are going up, and I was seeing in my surveys more and more people saying, "I'm being asked to pay an additional 10% on my existing rental property, and I can't afford to do that, but I can also not afford to move somewhere else because I can't find anywhere else. I'll have to pay more anyway." So whilst the official advertised rents might have actually moved down a little, although I don't think they did for very long, the real rents for real people continue to climb, and it's getting worse.
Yeah, absolutely. So the rental crisis is absolutely getting worse, and I've got a very comprehensive chart pack here to actually go through it because I've looked at this issue in detail, and just to give a quick snapshot where we are. So the chart on the top left, that's from CoreLogic, now Cotality. Again, that's at the end of 2024, and what it showed is that at the end of last year, the rental crisis was the worst. The share of income spent on rents was at its highest ever level, and the the chart on the right also comes from Cotality's June quarter rental review. And what it showed is that over the last 5 years, the median rent in Australia, the median weekly rent has gone up by $200. So that's $200 per week extra that Australians are paying to rent the median home. Now, that's an increase of 43% in 5 years. And what it means is that the typical renter in Australia is now paying $10,350,000 more to rent a home than they were 5 years ago. So that's, when you think about that, that is a massive hit to disposable income. And especially when you think about the fact that renters are typically lower income earners than homeowners. So we're talking about more vulnerable people paying on the median renter paying an extra $10,350 per week just to put a roof over their head. It's quite disgusting, really. And, you don't have to be a rocket scientist to know what caused this. And I've got two charts here, Justin Farbo again. And it's the massive surge in immigration. So the chart on the left shows the temporary visa holders in Australia. And we know that temporary migrants are the ones who typically rent, right? So they're basically the ultimate flow measure of migration. And you can see that when the temporary migrants left at the start of the pandemic, the chart on the right is the advertised rents by SQM Research, rents fell. And then when they surged back in once borders opened, rents soared, right? So when Labor came to office in the middle of June 2022, since then, we've had 750,000 extra temporary migrants. Now, that's temporary migrants, not including visitors, right? So that they're long-stay temporary migrants. We've had 750,000 extra temporary migrants land in Australia since mid-2022. It's quite extraordinary. And, over the 30 months since the Labor government came into office in mid-2022, net overseas migration, we've had 1.1 million net migrants land in Australia in just 30 months, right? And it's this surge in immigration that has obviously pushed rental vacancies down and pushed rents through the roof. It's pretty obvious there in the data. Anyone who denies it's, basically lying to themselves. And so basically rental vacancy rates hit a record low in 2023 when immigration surged. And it looked like last year, net overseas migration was moderating. So as I said earlier, it fell to 340,000 at the end of last year, and that was down from about 550,000. And it looked like rental vacancy rates were actually edging up a little bit. And part of that was, obviously the fall in net overseas migration, but there was also an increase in, group housing. So the number of people per dwelling actually rose. And as a result, rental demand, other things equal, fell. So it looked like rental vacancy rates were picking up. The problem is, in the past 6 months this year, the rental crisis has re-emerged, and the rental vacancy rates are back to their historic low levels. So the rental market's retightened again. That's shown by Cotality on the left and SQM Research on the right. They're both showing exactly the same thing. And data from Cotality that came out this week on actual rental listings is shown here. And what it shows, and that's shown on the left, the total number of rental listings across the capital cities is tracking at about half the level that it was during the height of the pandemic. So the number of rental listings has plummeted. And we've got the 12-month change in rental listings on the right from Cotality across all the markets. And what it shows is that across the combined capital cities, the number of rental listings just in the last 12 months has fallen by about 16% or nearly 16.5%. And it's fallen across every single market across Australia. So that's shown in purple. So obviously we've got a severely tightening rental market here. And because the market's tightening and rental vacancy rates are falling back towards historic lows, and obviously rental listings have fallen, asking rents, so advertised rents, are now surging again. So the chart on the left from SQM Research, it's the quarterly growth in residential asking rents. After falling at the end of last year, they're now surging back up. And on the right, we've got Cotality, same story. So both data sets are showing that rents are now reaccelerating, both those charts from Justin Farbo again. And so what's the culprit? Well, I mentioned it earlier. Net overseas migration looks to be surging again. So this is the same chart from Tarek Brook on the left. It's just been blown up a bit so you can see it a bit more clearly. The first 7 months of this year, we had record net permanent long-term arrivals, up about 5% on last year and up by about 56% on the pre-pandemic level. And on the right, that's from Justin Farbo, plots this series against the official quarterly net overseas migration. As you can see, there's very strong correlation historically. Now, what this data suggests, this net permanent long-term arrivals data, is that it's a leading indicator for net overseas migration, and it suggests that the net overseas migration has surged this year. Therefore, we've had a sharp fall in the rental vacancy rate, and rents are rising again. So, you can thank the federal government for running high immigration. And the outlook for renters is absolutely dire. So I mentioned earlier, these are the charts to show it. AMP Chief Economist Shane Oliver, a couple of months ago, estimated that Australia is currently sitting on a housing shortage of between 200 and 300,000. And the way he says he's not sure, where it is there, because it depends on the assumptions you use for the number of people per dwelling. But, somewhere between 200 and 300,000. And Oliver said that this worsening housing shortage, or this cumulative housing shortage, has been driven by the massive ramp up in immigration and population growth in the mid-2000s. So, as we know, the federal government more than doubled net overseas migration from about 2005. So I mentioned earlier that in the first 60 years after World War II, we averaged 90,000 net overseas migration a year. And there was only 2 years in that entire 60-year period where we had net overseas migration higher than 150,000. And it was only just higher than 150,000. But in the 15 years leading up to the pandemic, net overseas migration surged to an average of 220,000. And in the last 5 years, including the pandemic lockdowns, it's averaged 260,000. And it's this surge in net overseas migration and population growth that has driven this structural undersupply of housing. And, Shane Oliver actually wrote explicitly that Australian housing is, quote, chronically undersupplied, and that this has been the case since the mid-2000s when immigration levels were ramped up. That's effectively what he says. And so, between 200 and 300,000 homes. Now, CBRE released their latest apartment vacancy and rent outlook, earlier this month. And what they forecast is that Australia's population demand through immigration is going to continue to run well ahead of supply over the next 5 years. And as a result, Australia's rental vacancy rate, which is currently at a record low, or roughly at around a record low of 1.8%, CBRE forecast that by 2030, it's going to fall to 1.1%. So the rental market's going to tighten even further. And the individual capital city forecasts are on the right-hand side there for Sydney, Melbourne, Brisbane. You can see what they are now and what they're projected to be. And as a result, CBRE forecasts that apartment rents are going to soar. That's the chart on the left. So, a dire situation. Rents are already expensive, and CBRE forecasts are going to continue to rise. And this is matched by the National Housing Supply and Affordability Council, which is the federal government's own advisory council on housing supply and affordability. It released its State of the Housing Market report a few months back. I mentioned this last time. And they forecast that Australia is going to have a 79,000 shortage of housing, so an additional shortage on top of what Shane Oliver estimates over the 5 years to the end of to mid-2029. And so that's on top of what Shane Oliver says, so 200 to 300,000 plus another 79,000. Now, it's important to note that the National Housing Supply and Affordability Council's forecasts are based on the Centre for Population's net overseas migration numbers. And those are actually pretty conservative. So the Centre for Population forecasts that Australia's net overseas migration will gradually fall back down to 225,000 per year. Now, given that where migration's at the moment, the fact that the Albanese government's just raised the planning level for international students by 25,000, that they're, look like they want to keep increasing immigration, we can pretty much assume that this projection for population growth is not going to come true, because net overseas migration is going to be a lot higher than what the Centre for Population projects. But in their sensitivity analysis, that's the chart on the right, the National Housing Supply and Affordability Council says that if population growth is 15% higher than what the Centre for Population forecasts, which I think is pretty likely, then instead of having a 79,000 shortage of housing over the 5 years to 2029, we're going to have a 200,000 shortage. So that's 200,000 on top of what Shane Oliver's already forecast of between 200 and 300,000. You get the picture here? It's going to get pretty bad. Now here's the counterpoint. If the National Housing Supply and Affordability Council projects that if population growth was just 15% less than what the Centre for Population forecasts, then instead of having a 79,000 shortage over the next 5 years, or over the 5 years of 2029, we'd instead have a surplus of 40,000 homes over that 5-year period. Now, that there is a tacit acknowledgement by the National Housing Supply and Affordability Council that Australia should cut immigration. Because if it cut immigration, the housing shortage evaporates, and in fact, we'd have a surplus. That there is the solution to the rental crisis. Now, unfortunately, the Centre for Population forecasts that net overseas migration is going to stay high for forever. So it's forecast that it released in December last year, forecast that Australia's population is going to grow by 13.5 million people over the next 40 years. Now, to put that into perspective, that's like adding another Sydney, Melbourne, and Brisbane to Australia's population over the next 40 years. And in order to house that many people, we probably need about 6 million homes to be built, right? Once you account for demolitions. And the reason why I'd say that's pretty conservative, the reason why I say that's conservative is that most of these new homes will be apartments, and a lot of them will be shoebox apartments. And obviously, shoebox apartments can't carry as many people, house as many people as houses. So as a result, we need more homes. So, this is just a diabolical situation for renters. But there is a solution, Martin, and it's being played out right now in Canada. Just cut immigration, right? So like in Australia, rents in Canada soared to unbelievable highs in 2022 and 2023. That's shown in the chart on the left. When Canada experienced the biggest immigration and population boom in its history. A lot like us, it just had a massive post-COVID immigration surge. And as a result, rents rocketed. That's the chart on the left. But last year, unlike Australia, the Canadian government recognised that it completely stuffed up and it had created a housing crisis and an infrastructure crisis. So they imposed a 3-year population freeze. And basically, they've lost a whole bunch of temporary migrants who've gone back home. And as a result, Canada's population growth is basically stalled, right? That's the chart in the middle there. And in places like British Columbia and Ontario, which is where Toronto and Vancouver are, population's actually population growth has slowed even more. And surprise, surprise, with this stalling population growth, that's the table on the right, asking rents in Canada have fallen for 11 consecutive months. And Ontario and Vancouver and Toronto have experienced, which I just mentioned, have experienced the biggest slowdown in population growth. They've also experienced the biggest fall in rents. So this here tells you that the solution for Australia's rental crisis is to cut immigration, right? Canada's doing it and it's working. And in fact, Canada's largest bank, BMO, they stated last month that they expect rents to continue to fall as strict immigration targets continue to slow population growth and limit new household formations. And it's not just Canada, Martin, it's also New Zealand. So New Zealand has had their net overseas migration has fallen to a 2.5-year low. It's now tracking at about 13,000 per year, which is well down on the decade average of about 50,000. And, in 2023, New Zealand's net overseas migration was 120,000. It peaked at 120,000. So it's now 13,000. So it's fallen quite significantly. It's, their immigration has slowed right down. And to nobody's surprise, rental inflation has also collapsed. That's the chart in the middle by Justin Fabo and the chart on the right. And in fact, the chart on the right, which shows new rental bonds, it actually shows that rents in New Zealand have actually turned negative. So we've got two examples here, Canada and New Zealand, which have both slowed immigration dramatically. Canada have actually, they've seen an outflow of temporary migrants, and both have experienced huge reductions in rents. Canada's actually 11 consecutive months of falling rents. What does that tell you, Martin? That the solution to Australia's rental crisis is to cut immigration, right? If we don't do it, we're going to have a perpetual housing crisis, as the National Housing Supply and Affordability Council shows, as CBRE shows. If we keep doing the same thing that we've done, we're going to continue to have the same results. This is why we keep saying this is the definition of insanity. So why won't our policymakers just look across the pond at New Zealand or look over at Canada? The Canadian government's a left-leaning government. They're considered woke, but they've managed to have this conversation on immigration. They've managed to cut immigration, and they're now solving their rental crisis. It's not solved, but they're in the process of solving the rental crisis. But instead, in Australia, Albo is ramping immigration again. He's just increased the cap for international students. We've already got the highest share of temporary migrants as a share of our population in the world. We've got the highest concentration of international students in the world. Second to Luxembourg, but basically the highest out of significantly sized countries. And yet Albo wants to bring in more. He's increased the cap, and this is into a rental crisis. So what are we doing here? Like, we've got the template in Canada and New Zealand. So why isn't the federal government willing to follow that? Because that would solve the housing shortage, and it would solve the rental crisis. And I'll tell you this much, Martin, it'd solve it a hell of a lot quicker than this, trying to boost supply, which is an impossible task, which I can get into if you want as well.